Croda is a classic specialty chemicals company. That is, they sell and market their products based on their effect in the end product formulation and not on a physical or chemical specification. That's classic specialty chemicals. Their focus is right at the end of the value chain. They've divested a lot over the past decades from their upstream activities in fatty acids in particular. And today they're focused not as much as I thought on surfactants, but anyway, let's dig in and see what they're all about. Croda's revenues in 2024 about £1.6 billion, and they are in 3 major business units. So let's put up this slide and we'll go through each of the units. So first one is consumer care. That's ingredients for consumer products. They focus on what they call local and regional customers. By that I take to mean they're not selling a whole lot to the likes of P&G, Unilever, Henkel, etc., but those next tier customers. And that's about 56% of their revenues. Consumer care. Life sciences, about 31% of revenues. So these are delivery systems for pharmaceuticals and agricultural products, so-called adjuvants mainly. And then the third one, industrial specialties, which is a kind of a special unit because they sold a big chunk of their industrial business to Cargill, but retained many of the plants servicing that business. So there's a big portion of that industrial specialties business is transfer sales to Cargill to support the Cargill business that Cargill bought. And then there's some direct sales in there also. So let's go through each of these units. So inside consumer care, you've got beauty actives, which is peptides. You can read as well as I can if you freeze the slide or take a screenshot. Biotech, botanicals, and so forth. Beauty care, which is 25% of overall corporate Croda sales, comprises 2 pieces: effect ingredients, so sunscreens, proteins for hair care, and so-called formulation ingredients, which is where I believe most of the surfactants are. These are like this, they call the structural chassis of the consumer formulations. Also in consumer care, you've got flavors and fragrances at 17% of Croda sales. And then home care, which is a small portion, and we always knew that, a little under 3%. And there's 2 pieces to that. There's proteins, which they sell into fabric care to increase the lifetime of the clothing. I've actually seen those demonstrate that they're pretty good. And some household surfactants. Then within life sciences, you've got the pharma business, which back in the day, not too long ago, in 2021 and 22, as we'll see, comprised a big chunk of COVID-19 vaccine lipids. But the focus there is on drug delivery and excipients and adjuvants for drugs. And then in crop protection, you've got the crop protection formulation adjuvants that go in alongside the active herbicide and pesticide ingredients. And you've also got a business in seed enhancement, seed coatings to improve things like seed development and germination and so forth. And then, as I've already said, that last industrial specialties piece. So where are the surfactants? Well, I'm going to say that they're in beauty care, home care, pharma, crop protection, and industrial specialties. And I'm going to have to estimate, because they don't break this out, but I'm going to roughly estimate 50% of beauty care sales is surfactants, 80% of home care, 40% of pharma, 75% of crop protection, and 75% of industrial specialties. If you add those up, do the math, that gives us around $619 million of surfactant sales, which is about 40% of Croda sales. That feels about right. It's honestly a little bit lower than I thought it would be before I got into this analysis. And certainly on a tons basis, it's going to be a lot more than 40% of Croda's tons are in surfactants. Maybe it's 75% of the tons, because really you're not really that bothered about tons in the flavor and fragrance area. It's totally different ball game. But anyway, if there are Croda people out there, or recent former Croda people out there that want to tell me what the real number is, I am happy to accept that information confidentially, of course. So that is the Croda business. So Croda, as far as I can see, has around 33 plants. I'm not sure which of them they continue to own that were associated with the sale of the industrial business to Cargill, but I'm going to go ahead and read through some of them. So they've got 4 in the UK, and they've got 5 in France, including alkoxylation in Choc, and of course they have 1 in Grasse, which is the center of the perfume universe. That's a Iberchem plant. They have 3 in Spain, including alkoxylation in Mevisa, and at least 3 in Spain. There's a number of Iberchem plants in the Murcia region. 1 in the Netherlands, 1 in Italy, 1 in Germany and Emmerich, 5 in the United States, including, of course, Newcastle, Delaware, where they installed in 2017 the bioethylene oxide plant feeding their ethoxylation, and Mill Hall, Pennsylvania, another ethoxylation, Lamar, Pennsylvania, Alabaster, Alabama, never heard of that town, where they have Avanti Polar Liquids plant, Salinas, California, and then they've got in Asia Pacific, they've got it seems about 4 plants in India, including a brand new alkoxylation plant in Dahej, which I don't think has been commissioned yet. 1 in Singapore, 1 in Indonesia, 1 in Japan, 1 in Korea, 2 in China, including a new plant to be commissioned this year, fragrances and flavors, and 1 in Brazil. So, as I said, some of these are affiliated with the industrial chemicals business, and I know they retained some of those facilities. Some may have been sold to Cargill. Not sure. Someone, if you know, please tell me. But a good selection of plants globally. So how have they been doing financially? What I've done is I've taken the last 15 years of finances and grouped them into eras, so to speak, not inspired by Taylor Swift. So let's go ahead and look at this slide. And so you can see like 2010 through 15 through 19, sort of fairly steady growth, a lot of focus on sustainability in that era, including the BioEO investment in 2017. And then, of course, they had a tremendous pandemic. 2021-22 was really peak Croda, right? The vaccine pulled in a lot of lipids and adjuvants from Croda. During that period, they made the Iberchem acquisition. They divested the industrials business to Cargill. And so really a peak time in terms of revenues and earnings and profits, as you can see from the slide. Post-pandemic, things have not been so good for Croda. So last year, 24 and 23, revenues dropped off along with earnings. Those issues were compounded by destocking, which many companies saw in 2023. The way they characterized 24 and the sort of the current era that we're in right now is a transitional year where they're really focused in on dealing with demand softness, and we'll talk about that in a minute, as well as focusing on improving margins. So interesting financial picture, which I think you'll see also reflected in the stock price, which we'll address at the end of the video. The big issues that Croda has to deal with right now are the following. Sales volumes. Demand is weak across the board for a lot of chemical companies, especially outside the US, and so really regenerating growth, getting back to those COVID peak years is going to be a real challenge for the company. Along with that, number 2 is margins, and that really comes along with volume, getting plant utilization up. As we know, with high utilization comes decent margins and decent cash flow. So that's the sort of the two-part problem there. The third issue that they have to deal with is integrating acquisitions, really making sure they fully Croderize those acquisitions they've been making. A lot of them in real good specialty businesses, flavors and fragrances in particular, but making sure they get them into the system without losing the individual characteristics of the acquisitions. The fourth one is innovation. They have a measurement called New and Protected Products, NPP, which right now, apparently, according to their reporting, is running at 35%. Over a third of their sales are in these NPP products. As we know, new is hard. And keeping that momentum going is going to be very difficult for them, especially in light of number 5, which is regulatory pressure. They've always prided themselves on being a very sustainable company, being really out front in that area. But increasing regulation in the sustainability area is going to be a challenge for Croda to keep ahead of that, continuing to be a leader in that area, especially in light of number 6, the 6th issue that I think they have to deal with now, which, again, a lot in common with many chemical companies, is volatility in the basic feedstocks, the basic raw materials that they use, especially the bio-based feedstocks. The vegetable oils, including palm oil, are volatile commodities today, and pricing is pretty high historically today in those vegetable oil products. And of course, relying on those for sustainability is going to continue to be a real challenge for companies like Croda, who also seek to maintain those high margins and that innovation. And so a lot of things to deal with on the table for Croda right now, but hopefully coming out of that trough post-pandemic, post those peak years, they're going to see some growth going forward. So let's see. So how has Croda done as an investment? CRDA.L on the London Stock Exchange. So let me throw up this slide. I've taken about 20 years worth of data, and I've used one of those online total stock return calculators. So if you'd put $10,000 into Croda 20 years ago and you reinvested all the dividends, then this is how the value of that 10,000 investment would have tracked. And it would have tracked pretty nicely, even net. It's gone up and it's gone down, but over that 20-year period, your $10,000 would have turned into around $75,000. And that would have been about a 10.8% annual rate of return, which is not bad, okay? However, if you had the foresight and the wisdom to cash out of your investment at the end of 2021, if you said to yourself, well, we've had a good run through COVID, but I want to take my chips off the table, then your $10,000 would have turned into over $250,000, and that's double the rate of return. That would have been an annual rate of return of 21.3%. However, conversely, if you kind of got really excited about Croda as an investment because you saw what was happening during that peak Croda period, right, during 2021 as they were enjoying the fruits of the pandemic vaccine, and you bought Croda as a Christmas present, let's say at the end of 2021, then by today, your $10,000 would have turned into $3,000. You would have lost 70% of your investment. Again, if you bought at peak and held onto it till today, and that would have been a negative 29% per year return. So there you are. That's why I don't invest in individual stocks, even stocks of companies that I think I might know about, because you just never know. But look, I love Croda. I think they do a great job. I use them as an example in my one-day surfactant course. I use them as an example of a specialty chemicals company. Like, this is what specialty chemicals companies look like. This is what they do. This is how they do it. This is the strategy they adopt. And yeah, I wish them a lot of luck getting out of this current trough that they're experiencing. A lot of economic headwinds out there today, but the specialty model, I think, is ultimately in the long term pretty robust. So let's check in on them again, maybe in another 20 years. Let's see. That's it for now, guys. I appreciate your time and attention as always. Thanks for listening.